Finance Committee. Presentation of the approval of the 24 annual financial audit report.
I want to welcome back Erica Proctor from Audit. Erica, thank you for all of your attention and detail to the three agencies, two of which are a little more detailed than the third, but we'll go through them. What we'll do is typically, like before, we have we open the meeting, we have Erica present it, then we'll recess the meeting after there's no questions, and she'll do the next agency's audit recess, and so that we can get her on her way. I'm sure she's got other books that she needs to attend to. So with that, I'll turn it over to the IDA audit.
Great. Thank you. Well, thank you so much for having me. I want to thank Bill, Mary, and Laura for all their hard work. They do a lot of requests over the course of the audit, and they are always on the drop of everything and get us the answers. It's greatly appreciated.
You're running. I still haven't figured out your portal, but I'm
You signed in.
That's it.
Progress. So we're going to start. IDA is the blue papers that you have in front of you. So the top document that you'll see here is our required communications letter. So it'll be very similar to what you've seen in years past. Professional standards require that we communicate certain information to you as part of the audit process. So that's what this letter entails. You'll see a very similar letter for all three agencies, so I won't go through it in detail all of them, but I will go through it now for this. You'll see towards the middle of the page, for the IDA, there were no new accounting policies that were adopted. The application of existing policies wasn't changed for 2024. We noted no transactions are entered into by the agency for which there was a lack of authoritative guidance or consensus, and all significant transactions have been recognized. We did not know any particularly sensitive estimates or disclosures. If we did, we would perform audit procedures to ensure that those were reasonable. And we didn't identify any significant difficulties in dealing with management over the course of the audit. And that's really important because you're the ones who audit us. So if we did have concerns or issues, we would want to bring that to your attention. The bottom of the first page, you'll see we did identify some misstatements as part of the audit process. Those are on Exhibit A on page 3. Turn to page 3, you'll see at the top. So the change in that position unadjusted is the number that we got when we originally obtained the trial balance. So that was your net income at the time that we got your original trial balance. There were client adjustments after we got the trial balance of about $164,000. A lot of that is due to the timing of the audit. We come in that first week of January, there's still some cleanup that needs to be done. So there were some adjustments right after we got this trial balances. And then we had some current year audit adjustments totaling $465,000 roughly. This is a larger number than you've seen in the past as far as audit adjustments. Part of it, about $390,000 of it, is related to the acquisition of the collection facility. So we had to recognize that coming onto your books. And the rest of it is, for the most part, typical entries that we would have as far as accruals, things that need to be booked at your, again, due to the timing of planning audit. You will see later on when we get into the financial statements, because that number is so large at about $465,000, we did have what we call a material weakness this year in these financial statements, but we'll get into that. I'm just going to jump back to page 2 really quick of this letter. So at the top of the page, you will see we did have an uncorrected misstatement this year related to cash. So the cash balance, the reconciled balance did not agree to the amount on the trial balance by about $18,950 this year. Management has determined that is immaterial to the financial statements. We do point out here that this could potentially cause future years to be misstated. However, the current year is not materially misstated as a result of this difference. Towards the middle of the page, you'll see we include here anything about obtaining a second opinion from another accountant. You are more than welcome to obtain a second opinion. And the reason we include this here is because if you got a second opinion from another accountant, we would want to know about it to make sure that they have the proper information before giving you their opinion. As far as we're aware, there were no such consultations. And lastly, we discussed a variety of matters over the course of the year related to the agency. These discussions, of course, occur in the normal course of our relationship. They're not a condition of our retention. We just like to keep that open mind. Questions on this one? The next document you have in front of you are your financial statements for the Livingston County Industrial Development Agency.
Could we wait just a moment and then I'll switch this off? Here we go.
Keep going.
So on page 1 of the financial statements, you will see our opinion. So in our opinion, the financial statements are fairly stated in all material respects. That is that's the highest level of assurance that we can provide. Few things I want to point out to you within these financial statements. If you go to page 8, you'll see your statement of net position. So this is your balance sheet year over year. A couple things I wanted to point out here. So your capital asset number actually increased from about $196 last year up to $13,000. This was due to the purchase of a mower this year. So when you're purchasing that type of equipment, that gets recognized as an asset on your books. Additionally, you'll still see that the lease receivable and the land held for development and sale increased this year. Those are related to a new lease related to the correctional facility as well as that correctional facility. So because that is considered an asset to you and you are planning to eventually sell it or get rid of it in some way, that is shown there. So you'll see that your land held for development and sale went from about 1.4 million up to 1.1 million. You'll see if you go down the page a little bit more, accounts payable increased significantly this year. This is really just due to 2 things: timing of payments around year end, which just depends on what you're doing at that time. And also you have about $41,000 of liability at your end related to utilities for the correctional facilities. So the timing of those utilities influences that now is. And you had a small grant payable related to LCDC this year of $2,500 at your end. That's that's not audit fees that were paid on the ID. You flip to the next page, so page 9, this is your statement of revenues, expenses, and income statement. So you'll see your administrative income dropped a little bit this year. That's just due to the timing of projects and closures, but you'll see a significant increase in miscellaneous income. Again, that is due to the correctional facility. So that $390,000 that we recognized for you because you didn't have to pay to acquire the correctional facility, it's recognized as revenue. You'll see the expenses this year, the biggest change was that now you have that utilities expense, which was your largest expense this year, and that's related to the correctional facility as well. But when you come to the bottom of the page, you're changing that position, that you still have a healthy increase in your net position this year of $343,000. So at the end of the day, you added that to your bottom lines. I'd like to point out, so there's too much. So page 16. A little bit more detail on the correctional facility coming out of your books. So this is the detail of that land held for development and sale that I was talking about before. So you still have that land in Dansville, the Avon, and the improvements in those, but now you also have that corrections. Now the last part that I want to bring up is on page 19. So this is our report on the internal control over financial reporting. And this is where we get into that material that I was mentioning. So as part of the audit process, we look at the internal controls for the financial reporting to make sure that there are controls in place to ensure that there are no material issues or deficiencies in your financial statements. This year, due to the number of journal entries and the dollar amount of those journal entries, we did ultimately have to report a material weakness. But the agency is aware of the finding and they're working to ensure that the numbers are correct for this year and going forward. Any questions?
We've talked to Erica about the outsourcing of our financials for 7 months. Was particularly challenging with ProNexus being involved. So I'm not really surprised that there were entries that were missed with them. We've discussed post-mortem on our relationship with ProNexus, but we think that we're on a much better path having Laura in-house and getting those entries written.
In the future, with the correctional facility, regardless what we do with it, we definitely want to change that to a plus. How will that show up in here then?
Yeah, so when you ultimately, however you decide to get rid of it, so if you end up selling it, what'll happen is the money that you bring in from that will record basically the difference between the money that you bring in and the 390,000 that is reflected there will be the income. So the asset will come off the books and then they'll show gain on the sale for whatever it is.
Oh, so 390. Oh,
That was the fair value of the property as it was.
Yeah, praised. Yeah. Praised. We did an appraisal on it before we even acquired it.
And the state, how did that work? Did we do two?
We did one. They ended up doing kind of their own, I forget, they call it a desktop appraisal. So it basically just kind of means they do some research. They ended up agreeing with ours. So they took our number. Or validated it anyway. Yes, 390 seems a little light for 19 buildings and 286,000 square feet. But
And 160 some acres.
And the last document you have in front here related to the IDA is just a letter that we provide that you have to upload to the UDO saying that you don't have investments, but if you did have investments, we would look at that and find. Any other questions on the IDA?
so next year we may not see a difference in that material units, but it should work itself out. Okay.
got it. Laura and I have already kind of talked about setting sort of a year-end deadline of December 15th. Whatever is not paid by December 15th will automatically go to 2025. So that it does, we want to clean it up so that there's not so much carryover at year-end, which will reduce one of those numbers, your liability number. But also to make sure that the entries that are being made are in fact being put under the right categories. Yep. Is that you can do when somebody's sitting outside your office than it is when somebody's sitting, I don't know where he was, Greece, I think.
Okay.